Good morning to all participants in the call. Welcome to the Q1FY22 earnings call of Datamatic Global Services Limited. The results and investor presentation have been already mailed to you, and it is also available on our website www.datamatics.com. In case anyone has not received the copy of press release and presentation, please do write to us and we will be happy to send it to you. To take us through the results today and to answer your questions, we have with us the top management of the company represented by Mr. Rahul Kanodia, Vice Chairman and CEO, Mr. Sandeep Mantri, Chief Financial Officer, Mr. Mitul Mehta, Senior VP and Head Marketing and Communications. Mr. Rahul will start the call with brief overview of the quarter gone by, which will be followed by financials given by Mr. Sandeep. We will then open the floor for Q&A session. As usual, I would like to remind you that anything that is said in this call which gives any outlook for the future or which can be construed as forward-looking statement must be viewed in conjunction with risk and uncertainties that we face. These risks and uncertainties are included but not limited to what we have mentioned in the prospectus filed with SEBI and subsequent annual reports, which you can find it on our website. With that said, I now hand over the call to Mr. Rahul. Over to you, sir.
Thanks, Asha. Welcome and thank you everyone for joining our Q1 FY22 earnings call. Congratulations to all as we enter into our 75th year of independence and hope all of you are safe and healthy. We appreciate you all taking time out and joining us for this conference today. I will share with you some business performance highlights, and Sandeep, our CFO, will update you on the financials, and post that we can get into a Q&A. We had a good start to the financial year, and I'm glad to inform you that we are all seeing business coming back to normalcy. We reported a revenue of 287.8 crores as compared to 277.1 crores last year, which is a growth of 3.8% on a year-on-year basis and 1.6% on a quarter-on-quarter basis. However, excluding Signex, which is a subsidiary we divested in Q4 of last year, we have grown 21.6% on a year-on-year basis and 1.6% on a quarter-on-quarter basis. Despite the challenges imposed due to the second wave of COVID, we sustained our double-digit EBITDA margins at 14.4% during the quarter as compared to 10.3% in Q1 of last year. Our BPM revenues, which now contribute 57% of our revenue, grew at 35.5% on a year-on-year basis, and marginally dropped by about 0.4% on a quarter-on-quarter basis. Our IT revenues, which contributed 43% of our revenues, grew at 7.1% on a year-on-year basis and 4.4% on a quarter-on-quarter basis, excluding Signex. Both of these areas experienced growth due to the increased customer demand and deeper customer engagement. I'm happy to inform you all that we declared an interim dividend of rupees 2.5 per equity share, that is 50% of our equity share, which is a 5 rupee share, in the board meeting held on the 13th of August 21. We are seeing a strong demand environment and our pipeline continues to remain healthy. As mentioned in the earlier calls as well, I would like to reiterate that the pandemic-induced challenges have accelerated the spend and investment in platform-based digital solutions like digitization, cloud, automation, artificial intelligence, and digital experiences, which in turn has created huge opportunities for companies like ours. We continue to see specific opportunities in the process automation and dynamic content management areas. In line with this trend, we are increasing our focus on digital transformation opportunities and the U.S. market. We have strengthened our U.S. sales team and have with a sharper focus on intelligent automation products, including TrueBot in robotics and TrueCap in intelligent document processing. With the growth coming back, demand for talent and skilled people has increased significantly across the industry. This is causing high attrition and increased pressure on salaries and recruitment. We are addressing these challenges by expanding our operations into Tier 2 cities and negotiating higher prices with customers. Due to the second wave of COVID-19, Datamatic stepped up its CSR initiatives and donated an oxygen plant to a hospital in Delhi through the Rotary Club of Delhi Premier. We also donated mobile toilets and bathrooms for the rehabilitation centers of COVID-19 patients at Puducherry. Additionally, Datamatic deployed its TrueBot technology to help Nashik Municipal Corporation manage antigen test data for ICMR. I would like to take this opportunity to thank our customers and shareholders for continued support and trust. I would also like to thank DATAMATICS for all their dedication and commitment shown during this difficult time. We are well positioned to address the headwinds created by the pandemic. We remain cautious and at the same time confident of sustaining the growth momentum in the coming year. With that, I will now hand over the call to our CFO, Sandeep Mantri. Sandeep, over to you.
Thank you, Rahul. Good morning, everyone on the call today, and thank you for joining us on our Q1 FY22 earnings call. I hope that all of you are keeping well and safe during this challenging time. Let me start with the key financials for the quarter ended on June 30, 2021. So as explained by Rahul, our net revenue was at 287.8 crore, up 1.6% on quarterly basis, sequential basis, and up 3.8% on year-on-year basis. Without Signet, the growth on a year-on-year basis was 21.6%. The growth was broad-based across all our business lines and verticals. The ratio of IT and BPM during this quarter was at 43% and 57% during the quarter. IT services revenue for the quarter were at 123.9 crore, a growth of 4.4% on a quarterly basis and 7.1% on yearly basis. This is without Signet, we are talking. IT services EBITDA margin was 6.1%, which is slightly higher from the last quarter margin. And if we don't consider investment in product, our adjusted EBITDA margin was 10.7%. BPM revenue for the quarter was 163.8 crore, which is a marginal decline of 0.4% sequentially, and a growth of 35.5% over last year same quarter. As you all are aware, our Q4 revenue include seasonal tax revenue, and that is why Q4 BPM number are really not comparable with the Q1 BPM number. Our BPM margin was 20.7% for this quarter. Our consolidated, now coming to EBITDA, our consolidated EBITDA grew by 45% YOY, and if we exclude Signet from last year Q1, it was 86% YOY. Our consolidated EBITDA margin for this quarter was 14.4% as compared to 14.8% in Q4 of FY21 and 10.3% in Q1 of FY21. Without Signet, our EBITDA margin was 14.4%, which is a growth of almost 500 points on a YOY basis. So, despite pandemic challenges, we are able to sustain this double-digit EBITDA margin due to cost optimization measure and also some savings due to COVID, and also the revenue growth during this quarter. Our PBT for the quarter was at 46.9 crore, a growth of 35.6% on a quarterly basis and 139.4% on a yearly basis. This jump you can see is due to one-time exceptional gain of 10.2 crore arising from buyback of equity share capital and redemption of preference share capital held in overseas subsidiary. PBT without Signet grew by 35.6% and 240 on a QOQ basis and 242.4% on a YOY basis. Our effective tax rate for the quarter was 15.9% as compared to 17% in Q4 FY21 and 28% in Q1 FY21. Our PAT after non-controlling interest stood at rupees 39.6 crore, a growth of 38.1% on a quarterly basis and 193% on a YOY basis. Without Signet, our PAT grew by 38% on a quarterly basis and 266% on a YOY basis. EPS diluted for the quarter was 6.72 per share, which is higher than Q4 of FY21 and Q1 FY21, where we were at 4.86 and 2.29 respectively. Without Signet, our diluted EPS grew at 38.1% on a quarterly basis and 266.6% on a YOY basis. In terms of balance sheet, our balance sheet continued to remain at a healthy position. As mentioned in our earlier call, we are now a debt-free company. As on June 30, 2021, our total cash and cash equivalent and liquid stood at rupees 351 crore as compared to 254.5 crore last quarter. Even our DSO was at 70 days in Q1 FY22, which is a slight increase from 65 days in Q4 FY21. We continue to remain cautious on pandemic situation, and we are confident of combating these challenges and maintaining a growth momentum. In terms of our geographical footprint, US comprises 58% of our business, India is 22%, Europe is 15%, and rest of the world is 5%. In terms of industry, BFSI continues to remain key segment for us, which is 26% of our revenue. Publishing is 28%, technology and consulting is 18%, manufacturing is 4%, e-com is 6%, and others are at 18%. Our client contribution remains healthy, with top 5 clients contributing 26%, top 10 38%, and top 20 52%. These are briefly our financials. With this, I will now pass the call to operator to open the floor for Q&A. And thank you very much for your patience, and I appreciate your continued interest in Datamatic. Thank you, Jay.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question at this time, they may please press star and 1. Any participants who wish to ask a question at this time, they may please press star and 1. A reminder to our participants, if you wish to ask a question, please press star and 1. First question is on the line of NGN Puranik from Enam Securities. Please go ahead.
Hi, Rahul. Congrats on a wonderful quarter, a comeback quarter in terms of how you have stabilized on your old businesses, and especially in terms of automation. The way you are going about looks interesting. I'm referring to the BPM business, the part of the BPM business, which requires intensive automation. I want to understand how much of automation tools are used, your own robot and others are used in the BPM business. Yeah. That's important to understand. Because the margin expansion and all shows that you have used it effectively. So that will be a good lever when you go to the marketplace also.
Sure. So the margin expansion is a combination of 2 things, increased automation as well as the increased cost cutting. We did reduce costs in the US and move more work to India. Plus within India, we moved to tier 2, tier 3 cities. And then we further automated it using a lot of our Tubot. So has the automation adoption increased in the company? Absolutely. It's increased substantially. We are doing more. It has not been a completed exercise. I think for the next 6 months, we will implement more automation and therefore improve margins a little more on the BPM side.
So what automation tools are used in BPM today currently?
So there are several tools. We are using our TrueCap and TrueBot, both of these, which we are taking to market also. Plus, in addition to that, we have several other tools. We've used our True AI to do automation in BPM. We're using True BI. And then there are other tools that we are not taking to market, but we are building ourselves for improving our own productivity.
So and these tools can also go to the market once it stabilizes within the BPM?
Possibly, but not certain. Because see, when you take it to market, you have to productize it. So therefore, you have to make it much more robust and package it in a way that it can be used by anybody. When we use tools internally, it's not something that any third party can use very easily. So depending on the effectiveness of the tool and how it plugs into TrueBot or TrueCap, we will increase the features and functionality of TrueBot and TrueCap and plug them in addition to what they already have. So we'll have to look at that case-by-case basis rather than a blanket statement.
But is there any limitation to use TrueBot and TrueCap in VPN?
No, there's not restricting us. We just have to roll it out in a very systematic way, because the moment you put a new product, a new tool, it can create some disruption to the customer project, and we don't want that to happen. So we are in a very steady way taking customer by customer and implementing these tools.
Correct. So you have to showcase with a few anchor customers. If the process develops nicely, then you can take it to other customers.
Absolutely. And each customer is always nervous when you're doing something new. So you do a small little thing, he gets the confidence, then you increase it.
So it's a transformation process as far as every customer is concerned.
That is
correct. If it happens with one or two customers, then it becomes easier it becomes a reference case. And then you can deploy it with other customers.
That is also true.
So then the go-to-market with this solution and with reference case becomes easier for you, isn't it?
Yes.
Interesting. So how is the TrueBot and TrueCap's market message today? So the sales marketing efforts are on?
Yeah, we've increased, as I mentioned in my address, we've increased the sales team in the U.S. They're beginning, and we've hired some good salespeople from our competitors. So they're getting some very good traction in the market. And we are hoping now, that will start moving fast.
And the
analyst coverage has given us some very good coverage, based on what they've seen in the product.
So the head of this practice has joined and stabilized well?
Yes, based in the U.S.
Based in the U.S. So what is he currently doing? He's looking close to the market, looking at...
Yeah, his primary focus is to get the sales activities going. So he's got a team. We are further augmenting the team. And we are also building more partners in the U.S. So that's going to be his primary focus, because the product engineering is based out of India. They've done a good job. The analysts have compared our products feature by feature and given us a very good report on that. So his now primary objective is to focus on sales.
So how do you motivate the alliance partners? So it is going to be a combination of your own sales efforts and alliance partners.
Yeah, so it is a combination of two things. One is the kind of commission or discount structures that you give to alliance partners. Second is the way you support them in making them successful. So we are passing on some opportunities to them, and whenever, if they struggle, we support them in making sure that they successfully implement it for the customer. So when they get a successful implementation and they get a good commission from Datamatics, and sometimes when we get business for them, they are more motivated to do more for us. So it's a very symbiotic relationship. The more you do for them, the more they do for you. Yeah.
So when they sell this solution, when they sell your product, is it standalone TrueBot plus that goes into the market, or is it any of their solution which gets bundled into it, or their solution gets bundled into our solution? How does it go?
So most of the cases it's our TrueBot or TrueCap. In some cases they would plug it into their platform as well. So those types of partners are the OEM type of partners. So we have different categories of partners. So some are large system integrators, then you have the consulting firms, and then you have the resellers, and then you have the value-added resellers, and you have OEM partners. So OEM partners have their own platform in which they plug in TrueBot or TrueCap. But other partners don't have their own platform.
So what's the typical deal size in this transaction?
So typically they start around $30,000 to $50,000, and then depending on the customer, it could scale to $200,000 to $300,000. And of course, some of the larger customers can go into $1 million also.
Oh, and that means that is an annual revenue.
Yes, annual recurring revenue.
Recurring revenue.
Yeah.
So So this and the deal size expands as you go by.
Yeah, it expands basis the size of the customer. If the customer is a large customer, then obviously it'll expand. If it's a small customer, it tends to then plateau.
So is it a rollout on multiple application? How does it happen? The expansion comes through rollouts?
Yeah, rollout to multiple processes within the customer.
Processes within the customer.
Yeah.
So, and the sales guys will have to develop visibility for the opportunity.
That is correct.
So that process is in place now?
It's in place. We have to expand it. So the core team is in place. The team has started moving in the market, but now we are in the process of expanding it further.
I see. So the marketing efforts are done, sales efforts have to go now. Is that
both will go hand in hand. A lot of marketing effort has been done, but we need to do more, of course. The sales effort will now start kicking in.
So the sales process is what your own internal homegrown sales process, the sales process that it brings to the table from their latest experiences,
So it's both. It's our own sales team, plus we've hired a team from our competitors who are very familiar with exactly how the competition is selling this product.
Yeah. So that's what I mean. So that new process is evolving.
Yes.
What's current?
But it's falling into place quite well.
Yeah. Interesting. So how is the pipeline looking?
Pipeline is beginning to increase now because US is also opening up. They're coming out of COVID also. So meetings have started happening, physical meetings. So it's now beginning to pick up. Plus our marketing effort is also picking up steam. So now it's the momentum is good.
Yeah. And how is the combination looking? The internal and the alliance partner mix?
So right now it's more the internal sales. The alliance partners are beginning to kick in, but they need to kick in a little more. So we need to support them a little more actively right now.
And they need some reference case and the showcase. So then more deals from alliance partners will follow.
Yeah, so what happens is that they have references from Datamatics, but they need their own references also. So once they have one or two successful projects under their belt, then they have their own references which they can take advantage of. Right now they are leaning on Datamatics' references.
And what about IT services? Is there any specific focus on cloud migration or customer experience? Or
Yeah, it's more around cloud, it's around AI, it's all around hyper-automation, which kind of dovetails with intelligent automation. So yes, there's more traction there, but that is from a services angle versus a product sale. So we're beginning to see more of that happening as well.
So the IT services will have a larger amount of automation content going forward.
Yes.
So that's interesting. So and then you will have the analytics also part of that.
So analytics today, what we are doing is we've taken a slightly different track. For analytics, we have partly bundled it along with robotics and IDP solutions. Partly we are taking analytics to our existing customer base within the existing service. So versus a standalone offering and a standalone platform, we are bundling it. So when we do, for example, finance and accounting services, we are doing for the customer spend analytics. So it's bundled along with the finance and accounting services versus a standalone offering. And that is getting better traction than the standalone. Because then they see value add to the existing service.
And the tools used are internal tools? Or?
Yes, we have a tool called TrueBI, which is a very important tool. So that's what we use mostly.
So what do you think would be the potential of a tool like this? Because analytics is going to be a very large market with the kind of data that is being thrown out. Can be potentially a huge opportunity?
Potential is large, but the analytics market is a very crowded market. And you have large companies, Tableau, ClickView, Microsoft, Power BI coming in, SPSS, SAS. So they are very well established, but they are pure play analytics. So therefore, instead of taking these guys head on, because it's a much more mature market, we thought we'd sort of go under the radar and service our customers with through the existing services that we're offering. Otherwise, the moment you go as a product, they'll compare with Power BI, and we cannot compete with a Microsoft.
Correct. And particularly spend analytics is a whole product market. There are too many large and mid-size, small size guys who operate in.
Correct. So that was one example, but those kinds of things is what we are doing.
Correct. So excellent, Rahul. Nice to see getting.
Thank you very much, Mr. Puranik. Thank you very much. Bye.
Thank you. A reminder to the participants, if you wish to ask a question, please press star and 1. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Am I audible?
Yes, Mr. Rajesh.
Okay. Hi, Rahul. So just trying to understand the product business a little better. Are you selling it as a product, or is it just part of your IT services business?
No. So the product business is robotics and intelligent document processing, those things called TrueBot and TrueCap. Those are being sold as products. The IT services is a different segment altogether. So the IT services is what we've traditionally done, but that is also now getting into this intelligent automation, hyper automation as a service, which is different from a product sale. So these products are being sold separately as a pure license.
Understood. So what were the revenues from these product sales?
So right now we are not tracking and disclosing those revenues separately, but it's within the. Right now we are still in the early phases. The product has been, featured very well by analysts who've reviewed it and covered us in their publications. So now we have to take it to market very aggressively. So we're not really tracking it separately.
I see. But the expenses related to that you're putting in the IT services, right? In one of your.
That is correct.
Talk about without product expenses. Okay.
That is correct.
So by when do you think you'll be in a position to talk about these products as a standalone, or as not a standalone, but as a separate business line?
Yeah, probably sometime in the next financial year, maybe a year from now.
Okay. And then are you using that in your BPM as well, or if you could just talk about how these products are helping you on the IT services or on the BPM business wins?
Yeah, so it is doing both. So we are using it in our BPM services also for our own productivity improvement, and you can see some of the impact on the financials of the company. Second is that when we go to market with these products, you're getting different kinds of deal opportunities which are potentially large, anywhere from $10 million to $40 million, which is a bundle offering, including products, including services, and which has BPM and IT all together. So we're getting a new pipeline of offering of services which are very different from what we traditionally did, which are including the product, services, IT and BPM all put together. So that's opened up a new segment for us in these which earlier we were not looking at, or they were not coming our way. So taking these products to market has helped us get a new line of leads coming in. They have not materialized yet because it's still early. For the last quarter, last 6 months, I would say, we've got some very, very interesting deals, but not materialized yet.
Understood. And you were talking about earlier some recurring revenues. So yes. What is the quantum of that?
So that's all the product business. So the product business will be annual recurring revenues because it's a subscription-based licensing model that we have adopted. So as I said, we're not tracking that separately, but therefore but in that space there's more stability because the revenue keeps repeating every year unless there's a problem with the customer.
Right. And so you will disclose it next year, right? That what is the recurring?
Yeah, sometime after about a year. Yeah.
That's okay, got it. All right, that's all I have for now. I'll get back in the queue for more if I have.
Thank you, Rajesh.
Thank you. Anyone who wishes to ask a question at this time, they may please press star and 1. The next question is from the line of Riya Sharma as an investor. Please go ahead.
Hello.
Hello.
Thanks for taking my question. As talent demand has increased, So what kind of supply challenges you are seeing and how we are tackling the same?
So we are facing supply challenges in the sense that when you roll out offers to new prospective candidates, the dropout ratio is much higher than normal. Dropout meaning on the day he's supposed to join, the guy doesn't join. He just drops out. So that is a challenge. So what we have done is we are focusing more on the tier 2, tier 3 cities and expanding our headcount there compared to the Mumbai, Bangalore kind of cities. And there we get a little better traction, and of course the costs are also a little lower than these large tier 1 cities. So yeah, it is a struggle. The whole industry is going through that phenomena, but so far we've managed reasonably well.
Okay, so my second question is employee headcount and attrition rate for the quarter, like any plans for the new hiring and wages hike?
Yeah, so our employee headcount is about 10,300 right now, and our attrition rate is on an annualized basis running at about 28%. So it's 7% for the quarter.
Okay, so right now we have a good cash in the book. So how we are planning to use like any M&A plans?
So on the M&A side, we keep looking at M&A opportunities, but our agenda is to acquire companies that fit with our core strategy, and that is a sweet deal. So it has to be available at a good price, and I don't want to be in a situation where we pay a premium just to acquire a company. So that's been our traditional strategy. We've acquired over 20 companies over the last 20 years. So we've had a run rate of about almost one acquisition a year, barring for the last 2 years we've not, because COVID period we didn't do any acquisition. So we keep looking at it. We are in dialogue with a few companies, but once they come to a more serious stage, we'll know what's happening. So that's on the acquisition side. Our focus is going to be to invest a lot of our funds into the product business. So we don't want to acquire there because we do need funds to invest in the product, because that has a huge opportunity and we need to capitalize on that opportunity that is there in the market currently. So we would rather spend on that front rather than spend it in too many acquisitions.
Okay. Thank you. All the best for the future quarter.
Thank you.
Thank you. Our next question is a follow-up question from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, Rahul, just on the margins, EBITDA margin is about 14.4% this quarter. So what's your guidance on this, especially given the investment that may be required for, pushing the product business in the market?
So we will maintain roughly that level of EBITDA margin because the investments that we will make, hopefully we will recover through the sales. So whatever we sell will get reinvested. So I don't think it should have a huge negative impact on the margin. Having said that, it could move by about 0.5% here or there. That's possible. But I'm not expecting, because when you look at the whole year, whatever we spend now, we'll start recovering maybe in 3 or 4 months from now. So it should not have a huge impact. Unfortunately, we're not, I don't know if it's fortunate or unfortunate, we're not capitalizing our expense. We're expensing them out. So we had budgeted about a 40 crore spend for this year on sales and marketing. I mentioned this in my last earnings call. So that's where we are. So for Q1, we spent about not 10, it is about maybe 5 or 6 odd crores. So we are a little slower on that spend. We need to step it up a little bit.
Got it.
Well, there may be some timing gap between the margins. We should acknowledge. When we spend versus when we get revenue, there may be some timing difference. Otherwise, margins will be more or less in the similar line, between 13 to 14% for this year.
Understood. The second question is on the revenue growth. Obviously, we grew very well year over year. So, what kind of growth we can see in the current year?
We will certainly, I think, end up in the teens this year. The same performance may not sustain for all 3 quarters going forward, but yes, it should be in the teens.
So in this quarter, that was quite high.
Yeah, this quarter was 21.6%.
Right.
Yeah, so I'm not so sure we'll sustain a 20% growth for the rest of the year, but it will certainly be in the teens.
Okay. All right. Thank you so much and all the best.
Thank you. Thank you, Rajesh.
Thank you. A reminder to our participants, if you wish to ask a question, please press star and 1. Ladies and gentlemen, that would be our last question for today. I now hand the conference over to the management for their closing comments. Thank you, and over to you.
Thanks. Thank you. I would once again like to thank all of you for spending time with us today on this earnings call and for your confidence in Datamatics. And hopefully we will have a good year, and we will look forward to meeting you again in the next earnings call, 1 quarter from today. Thank you again for being with us.